Hello guys, in today's part I'll be diving into major and minor inducement, and if you have been following up with the video course, I would really recommend you to pay keen attention into this part because it's a very crucial part on the video course. Alright, so without further ado, let me dive in. Alright, so this is Kiwi chart, NZD USD 1 hour time frame May 2025. And into the chart, we can clearly see price retraced and took out the major inducement, confirming this one here as a swing point, and then later reversed, breaking past the swing point, confirming this one here as a valid break of structure. I want to believe that each and every one of you knows such a pattern. Alright, so right now this means we are currently in a new trading range, with that one being the high of the range, and currently the range is ending right there. So we said once we have identified our trading range, obviously the next step is marking the inducement. So right here in our trading range, where is the inducement? We say that the inducement is the liquidity resting above the recently formed valid pullback high. And we can clearly see that in our range, ranging from that high all the way to this low, this one here is the recently formed valid pullback. And this one here then is, the liquidity resting above this high, then that's what we call the inducement. And in this case, now the question arises, is this inducement a minor inducement or a major inducement? Alright, to differentiate between a minor and a major inducement is that a minor inducement occurs before a valid break of structure and a major inducement occurs after a valid break of structure. That's the only difference between a major and a minor inducement. A minor inducement occurs before the break of structure. It doesn't matter, it can be a bullish break of structure or a bearish break of structure. As long as the recently formed valid pullback occurs before the valid break of structure, then that's a minor inducement. But if the valid pullback occurs after the valid break of structure, like in this scenario, let's say price now decides to lower like even further, forming another pullback before taking out this minor this minor inducement, then this one here will be a major inducement. We say the inducement is usually the recently formed valid pullback, so it depends the liquidity resting. If it's up in bullish scenario, then it will be the low, the liquidity resting below the low of the recently formed valid pullback. And if it is a bearish scenario, like in this case, then we can see here is the liquidity resting above the high, the recently formed valid pullback high. That's what we call the inducement. And in this case now, this one here will be the major inducement, and this one here the minor inducement. But currently in our situation, or in this trading range, where is exactly the minor and the major inducement? This one here will be the minor inducement, and this one here will be the major inducement. In this case, our trading range high is the one that will be a major inducement. Alright, so let me run price and see what price does. And by the way, another thing to note is that this one here, alright, this one, I don't know why I confirmed this one here as a swing point yet, though it's not a swing point currently. Actually, we will confirm this one here to be a swing point once price takes out the minor inducement, or maybe decides to go further and check out. By check out, not a break, a sweep. So if price just wicks above the major inducement, which is the external liquidity, the liquidity resting above our trading range high, that's what we call the major inducement, or in other words, the external liquidity just wicks and reverses back towards making the ultimate BOS, then this one here will be a confirmed swing point. So if price decides to take out the minor and reverse, this one is a confirmed swing point. So even if it decides to go further, sweep the major inducement and then reverses, this here is still a valid swing point. And if price breaks, reverses and breaks past that, then this one here is a valid break of structure. Right, so let's see what price eventually does here. All right, and exactly right here, price has taken out the minor inducement. So let's see if it reverses or continues towards the external liquidity. All right, price made that kind of reversal, but then later reversed back, and let's see. Right here, price ended up closing past our trading range high. If price swept, I mean if price just wicked above the external liquidity, in this case, let's say price just wicked above the external liquidity. So let's say in this scenario, price decides to just wick like in this scenario and then reverse like this, breaking past this one here. Then this one here will be a major inducement. I mean, this one here will be a sweep of a major inducement, and this one here will not be a change of character. It will be just a sweep of the major inducement. But in this scenario, price decides to break past the trading range high. So this means now it has made a valid break of structure to the upside, and this means now we are currently bullish. We are no longer bearish because we have just made a change of character, and right now we have shifted bias from being bullish and now we are currently bullish. All right, so right now we know our trading range exactly here. All right, by the way, this one here is the swing point. We said once price takes out the minor or the major, this one is a confirmed swing point. In this case, price went forward breaking past this high, so this means that now price has made a change of character. And currently, where is our inducement? So right here, I can clearly see the recently formed valid pullback low is this one here, and the liquidity resting below here is what we call the minor inducement. The reason as to why I didn't pick this one here is because that's not a valid break. I mean, that's not a valid pullback. So if you don't know how to identify a valid pullback yet, go back into my video course playlist. It's actually the part 1 of the video course. Watch it and come back or continue with the video course until you get up here. Maybe then you will understand what I am actually showcasing. All right, so right now this one here is the minor inducement, and the major inducement is actually the trading range low right here, because we're actually in a bullish scenario. So the external liquidity in this case now becomes our major inducement. So right now, this one here is the minor and this one here is the major. This one here is a change of character and we are currently bullish. So right now, not until price decides to create a new pullback, I mean valid pullback right here, then we will be waiting for price to take out the minor inducement for us to confirm this one here to be a swing point. So right now, let me see what price does. All right, price is reversing, but then price created another pullback without taking out the minor pullback. So this means then this one here is our major inducement and our range lacks a minor inducement. So in this case now, this one here is our trading range high, I mean trading range low, and this one here is the minor inducement. So right now, let me see what price created another pullback. Here we can see price created another pullback. We said the inducement is actually the recently formed valid pullback. So right now, that's our inducement. Let me extend this so that you can actually see where I'm actually marking the inducement. It's actually the liquidity resting below that recently formed valid pullback, and you can clearly see that price has taken out that. So this one here is a confirmed swing point. All right, so let's see. All right, price is reversing without creating another. I mean, right here you can see the opposing candles is 1 and then 2. The opposing candles, the bearish opposing candles here are 2. And in this scenario, when you see the opposing candles are only 2, then this this inducement shifts to this low because we need 3 opposing candles for us to confirm this one here to be a valid break of structure. Right, so have that in mind. So this one here is now our new, our new major inducement. So not until this one here is taken out, we don't have a swing point high. All right, so right now we can clearly see price has swept or has just grabbed the liquidity resting below our recently formed value pullback, I mean the major inducement. So this means that this one here now is a confirmed swing point. As the opposing candle, you can clearly see it's one bearish candle, two, and then three. So at least three. We only need at least three opposing candles. All right, so right now I can now confirm this one here to be our swing point. And if price now reverses and breaks past that, then that's a valid break of structure. All right, so right here the sweep fails and price headed out to mitigating this decisional POI right here. I mean the decision order block exactly right there, and you can see price is reversing. And if price heads out to break past that, then that's a valid break of structure. All right, and exactly right here you can see price is heading towards the external liquidity, and exactly right here price made that break of structure to the upside. So this one here is our trading range low, and that one there is our trading range high. I mean this one here is our trading range at the moment. That's the high, but it's not like a high that if price comes and breaks. In fact, let me not just place it here to avoid the confusion. So right now this one here is our valid break of structure. And right now another question that most of you ask is that if price has made a new trading range, does this POI that is yet mitigated, I mean you can see this one here is the extreme order block. I don't see any other order block here, like all the order blocks are mitigated. So this one here is the extreme order block. So this order block, is this order block still valid? I mean, is this order block valid in such a way that if price now reverses and mitigates this order block, then it will make that ultimate reversal? So right here price will do that? No, this one here is invalid right now. After price has created a new trading range, this one here is invalid. In fact, if price breaks past this one, remember this one here is our trading range low. I mean that's a trading range low. If price breaks past that, that's a change of character and would have shifted bias from being bullish to bearish. So this means then this order block will not be valid. Even if price may give a reversal confirmation from it, we cannot like take a trade from it and target all the way to this high, because even though like it may give some reaction, a good reaction, it will not make it out to the external liquidity. So this one here is no longer valid once price creates a new trading range. So that's something that you all need to note. All right, so right here price has made that break of structure. Where is our inducement? This one here is the recently formed valid pullback, and this pullback occurred before the break of structure. We can clearly see a break of structure is this one here. So this pullback which occurred before the break of structure, that's our minor inducement, and this external liquidity, that's our major inducement. So that's something I believe now you are actually getting it. All right, so right now let's see what price does. All right, price here creates a new recently formed value pullback. So this means now we have our major inducement in the range, and so right now we'll be waiting for price to take out the major inducement before we confirm the swing point high. All right, and exactly right here we can clearly see price did that. All right, so exactly right here you can see price has taken out the major inducement, and currently now whatever price mitigates here, either the decision or either the extreme, and then reverses, this one here is a valid break of structure exactly right there. All right, so let me continue running price and see if price decides to make a change of character. All right, exactly right here price now has made that change of character right here, and this one here is the extreme order block of the the previous trading range, because this one here was our current trading range, but now price has even created another change of character. So we are currently in a new trading range because price has broke past the external liquidity, I mean the trading range low. So right now we are currently bearish. We have made that change of character. and someone else would extend this order block just because this order block was not mitigated, and will be waiting for a reaction from it and targeting this, this high. This here will be an invalid trade. Even though price may give a reaction, that reaction will not make its way up into this external liquidity. So that's something that you need to note. So right here you can clearly see price is reversing and then price mitigated this. So right now let me see if this one here is a valid break of structure. Alright, so that's not a valid. Why? Because, alright, so this one here is a valid break of structure, guys. Why? Let me show you why this here is a valid break of structure. Let me rewind here. So exactly right here, where is our, because we have made that change of character, this one here is our minor inducement, and we'll be waiting for price to take out the minor inducement or the major inducement before we confirm this one here to be a swing point. And right here you can see price has created a new pullback here. So right here you can clearly see that this one here was a valid pullback because price closed right there and price went up and then finally down and then returned there. So this one here is a valid inducement, and right here we can see the order flows being formed. You can see this here order flow and is mitigated. Let me change the color of the order flow. You can clearly see that's the order flow mitigated, coming up to the next mitigated. Right here it's mitigated, and coming up again to the next order flow. Right here it's also mitigated, and then finally we have our order flow right here. And so we'll be looking forward for a reversal from there all the way to this low, because this one here is a confirmed low, because this one here is the inducement. This one here is a valid inducement, guys. This is a valid pullback. If you have been practicing on identifying the valid pullback, you will know why I choose that as a valid pullback, or I picked that as a valid pullback. Right now, if price breaks past this, then this one here is a valid break of structure. Bearish break of structure. Alright, so let me run price. Right, price now did that, and currently this means now we are currently in a new trading range, with this one here being our high of the trading range. So this means now any other POI that is above here, if let's say there was some POI that is unmitigated, let's say an order block in that case, that order block is now invalid and we trash that. Currently we are in a new trading range, with this one here being the break of structure. So this one here is a valid break of structure, and right here this one here is the POI. So right now price will only give a reaction. Let's say like in this POI, price may just give a reaction into mitigation of something here before reversing back. Like price will not give a full, like a full reaction all the way here towards these external liquidities, like targeting all the way there. No, it will only give a minor. In fact, sometimes it may just give a small pullback without even making it to the trading range POI. So that's something also you need to note. So right now you can see price gave that reaction, and in this case also you can see there is a valid pullback right here. You can see, guys, this is a valid pullback. This one here, you can see this is a valid pullback high, and this pullback is formed after the break of structure. So this means that this one here is our major inducement, and right now I'll be waiting for price to now mitigate a POI. Right now this one here, in fact this one here is the order flow, like this, all of this is the order flow. So if price mitigates this and give a reaction, or if price decides now to go further all the way mitigating this extreme order block before actually reversing, then that's okay. You can see price is reversing from this order block that was actually from a previous trading range, but it was unmitigated. So this order block will give a reaction, but this reaction will not like be fully like a big reaction that will make its way all the way breaking past this this external liquidity. It's just a shorter reaction for it to make it out to a POI before price continues with its prevailing trend. So right here, let's see what price does. You can see this here is a retracement, like a valid retracement. Price has taken out the major inducement and gave some, you can see the retracement, 1, 2 and 3 opposing candles. So this means now this one here is a valid break of structure to the downside. So that's something that you need to note. All right, so this one here is a valid break of structure to the downside, and we have made a new trading range. So this means now our order block up here is no longer valid because we are currently in a new trading range. This order block is no longer valid because we are now in a new trading range. All right, so right here you can see this one here is a valid break of structure. So where is the minor inducement and where is the major inducement? All right, so this one here is a valid pullback. You can clearly see this small here, that's a valid pullback. If I do this, you can see this one here is a valid pullback, and price has already taken that with a single candle. So if price breaks right here, this one here is not a valid break of structure. Why? Because this opposing candle is only one. Even though it has taken out the major inducement, the opposing candle is only one. So if price breaks past this low, then the major inducement shifts to the new high. That's something you need to know. These opposing candles need to be at least 3. All right, so right now you can see that's the case. Price has done that, and right now I'll be waiting for price to continue with that. Continue retracing all the way, mitigating this order flow, or if price decides to fail the order flow, then mitigate this extreme order block before giving out that reaction to the downside. All right, so right now let me see what price eventually does. All right, so right here, all right, you can see price has made or has broke past this low. So this means this one here is not a valid break of structure, and this shifts here. So now this one here becomes our, that becomes our new major inducement. Why major inducement? Because this inducement is occurring, or this pullback occurred after the break of structure. You can clearly see that this one here is our swing point. Right here, you can see this one is our swing point, and this one here is our valid break of structure because this one here is taken out. The major inducement is taken out. It doesn't matter, either the minor or the major inducement is taken out and price breaks past the swing point. The swing point is a valid break of structure. So right now I'll be waiting for price to mitigate either the extreme order flow. In this case, if the order flow fails, now is when I'll be looking forward to take the entry from the order block. All right, so right here price is heading up, and exactly right here the major inducement is taken out. Price has mitigated the the extreme order flow, and right now I'll be waiting for price to reverse. All right, price failed the order flow and mitigated the extreme order block, and right now I hope price will eventually make the ultimate reversal to the downside. And exactly right here you can see price did that. Price made that valid break of structure to the downside. So guys, either a minor inducement or a major inducement, both of them confirm a break of structure to the downside. I was just showcasing this because this here is very important, because on the next video I'll be showcasing on how or why the minor and the major inducement, like why should we use the major inducement and why should we actually ignore the minor inducement. I will, even though both of them confirm a valid break of structure, there is something that I want to talk about, something that it's very, very crucial before we get into the top down analysis. So guys, I believe you have enjoyed the video. If you did, drop a like and see you in the next part.